Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time on this Friday.
Good afternoon.
Well, we have to start with this huge rebound in U.S. stocks on Thursday, the biggest increase, in fact, since the early days of the pandemic. Data showing inflation possibly slowing down. The Nasdaq up an incredible 7.3%, S&P 5.5%, Dow up 3.7%. What's the story in the global markets?
Yes, if you look at the U.S. market, the stock price has risen quite significantly. Dow sold more than 1,200 points. S&P 500 added 5.6%. As you said, the Nasdaq surged 7.5%. This is the most rise since the April of 2020. The data that showed the annual inflation numbers eased to 7.7%. The expectation was around 8%, so it came in at much below expectation, and it continues to show a fourth consecutive month of decline. And therefore, people are expecting that already peak inflation has come through, and it is expected to go down continuously in the future. If you look at the core inflation numbers, it came in at around 6%, which is actually better than expected as well. So overall, that has put the overall interest rate environment to be much lower. If you look at currently, the 10-year U.S. government bond rate has fallen to well below 4%. It is trading at around 3.9% at the current point in time. The overall market-wise, any stocks that have shown significant decline in the past several months have shown a short squeeze, and so the stock prices for some of the major stocks has risen well above two-digit number. Any of these companies are going through this kind of the short squeeze. In terms of going into the future, obviously what's going to happen to the interest rate environment is very important. December FOMC meeting, the dot plot will be coming out, and what is expected to be the peak level of interest rate will be very important. At the time of November 2nd, Powell have said that the overall interest rate should rise above or beyond the expected dot number that showed in September, which is around 4.75% to 5% peak. But I think that with this kind of news, with the inflation number coming in below expectation, and also the labor numbers are coming in better in that, we expect the wage growth to be below 4% going forward. All that means is that maybe the peak level interest rate might not be 5%, maybe even go down to 4.5%. If that's the case, there aren't that many times of additional interest rate hike expected. So that is causing the market to continue to soar. So after the midterm election, usually the U.S. market tends to do well, and we think that this kind of trend could continue for the at least next several months.
Well, it was a similar story, not quite as drastic here in Korea today. Stocks with an outsized gain. Kakao and some of its affiliates up by double digits, as were some other tech and gaming companies. The exchange rate also coming down sharply, just 61 just today and around 101 in the past week. Tell us about the domestic market.
Yes, if you look at the Korean market, Kospi was up by 3.37% and Kosdaq was up by 3.31%. Now, Kospi is nearing 2,483, so close to 2,500. As you know, the low end of Kospi was 2,135. So obviously from that on, the market has risen more than 10%. Clearly, if you look at the on currency side, Korean won, the peak level was at 1440 level. As of today, it's almost close to 1310. So the level of the appreciation of Korean won was close to 10% as well. So that put together in U.S. dollar terms, Kospi is up more than 20% from the bottom to now. The main reason for that is because of interest rate. As we have calculated that 1 percentage point impact of higher interest rate would be translated into 440 points of Kospi. So from right now, from the 2,135 to 2,483, that's more than 300 points. So clearly that means is that the interest rate environment has declined quite significantly. If you look at 10-year Korea's government bond rate, it is hitting now at around 4.1%. It did go up to close to 4.8%. So clearly that decline of that interest rate impacts the market. In terms of how it will play out in the future, it depends on what the foreign investors does. If you look at the foreign investors, they have a net bought of 691 billion of KOSPI and 200 billion won of Nasdaq. And they did sell somewhat of the futures market. But if you look at the institutional money, 991 billion of KOSPI, 343 billion of Nasdaq, and also 650 billion won of the futures market. So the major seller was the retail investors, net selling by almost 2 trillion won worth of KOSPI and Nasdaq. So, which means that liquidity condition-wise, we think that the market can go up further on the basis of foreign investors continue to be net buyer of this market. And the Korean won should be appreciating to below 1,300 in a gradual period of time. I don't think that it's going to go down to 1,200 territories, but we think that there is a room for additional appreciation by anywhere between 3 to 5%. If that's so, then foreign investors should continue to be buyer of the Korean market. And if that's the case, then KOSPI can rise to maybe 2,600 territories over the next several months.
Well, finally, Mr. Yu, zooming out a little bit, the Korea Development Institute, state-run think tank, says it expects the economy to grow next year by just 1.8%. Korea has been a fast-growing economy for decades, so we're not used to that kind of low growth here. What do you make of the situation going forward on the economy?
Yes, KDI have said that the economy will grow around 1.8% next year. Now, this should be the slowest growth rate since 0.7% contraction in 2020 due to the COVID-19 period. The new projection is lower than the state-run think tank of 2.3% forecast released in May. So they are revising down these numbers. Obviously, that's because, as you know, government, the BOK have risen interest rate much more significantly, and higher interest rate environments have much significant negative impact on the consumer credit, and consumption, obviously, number will be coming in below expectations. Going into the future, however, though, if the economy stabilizes on the basis of U.S. interest rate picking out soon, and that the U.S. consumption numbers remains to be quite robust, nominal growth rate well above 5% to be remain. If that's the case, then Korea's export numbers should be reasonably okay. And also, if you look at the energy prices, it is coming down. Of course, oil prices have risen recently slightly, but nevertheless, the trend itself is going down, and we think that in a long-term basis, WTI oil prices should be coming down to around $75 to $80 per barrel in a longer-term basis. If that's the case, then we think that the overall net export should be improving, and therefore the GDP growth rate should not be too significantly declined. We're most likely to see around 1.8% minimum, and maybe as high as 2.2% going forward. If so, then we think that the overall earnings for the Korean company should be reasonably okay. Right now, KOSPI is trading at around 10 times P multiple and price to book of about 0.9 times a book, and with the ROE of about 9%. So we think that the valuation is still cheap if we see economy continues to grow at around 2% territories. And that should be most likely the case. If so, then Korean market should be doing okay over the next 6 to 12 months.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on the program, and have a great weekend.
Thank you. You too.